So guys, in the world of dividend investing, no other ETF is quite as widely worshipped as SCHD, which just recently came out with some news that, in the spirit of the holiday season, serves as a timely reminder of why this ETF truly is the gift that keeps on giving and why it is still the holy grail of dividend ETFs. And real quick, before we get into this news, I want to hear from you. Leave me a comment below and let me know how many shares of SCHD do you have in your portfolio. Let me know in the comments. But anyway, guys, here's the big news, and I gotta shout out my man SCHD Stan, aka Craig, aka Leroy Skywalker, because this news is coming straight from his page on Twitter. And if you're an SCHD shareholder or a fan, you should be following him over there at SCHD ETF. But as we can see, guys, SCHD just announced their fourth and final dividend payment of 2024, which is going to be coming in at about 26.5 cents, which may not seem like a big deal, but it is, guys. This one payment represents a 6.9% increase over last year's Q4 payment. So that's a pretty big year-over-year raise. But what's more is if we take all of the dividend payments here in 2024, all four of them, compared to all four in 2023, this represents a 12.23% year-over-year increase. And that's what I'm talking about, guys. SCHD has delivered yet another double-digit dividend raise, which more often than not is what we've been able to expect from this ETF. Looking at the dividend history chart over here on Seeking Alpha, in the 13 years this fund has been around, the dividend has been raised every single year. And out of those 13 years, 8 of them have been double-digit raises. And of the handful that weren't double-digit raises, I mean, even these two right here, 2015 and 2016, were pretty dang close. 9.5%, 9.7%. Those are both very solid raises. And the point is, guys, SCHD is just a dividend growth monster. You'd be hard-pressed to find another ETF that can match these raises. But it's not just the dividend growth that makes this ETF so great. SCHD also offers a very generous dividend yield to match. Looking at the full dividend stats here, if you were to buy shares of SCHD today, you'd be able to lock in a near 3.5% yield, which I think is a fantastic starting point that, when paired with that double-digit dividend growth rate, will skyrocket your yield on cost in what I think is a relatively short amount of time. And seeing how that's played out over the years, if you would have bought SCHD 10 years ago, back around this time in 2014, your yield on cost today would be sitting at about 7.4%, so more than double the starting yield today. And if we go as far back as the fund's inception back in 2011, your yield on cost from holding over the last 13 years would be sitting at about 11.7%, which is a killer yield on cost. But anyway, this is why I still consider SCHD to be the holy grail of dividend ETFs. It has rightfully earned and defended its title through its solid dividend yield and unmatched track record of dividend growth that always goes above and beyond. I mean, like I said, you'd be hard-pressed to find that type of dividend growth from any other fund. To put things into perspective, we can compare SCHD's dividend stats to some of its peers like DGRO and VYM. That's DGRO's stats there on the top and VYM's on the bottom. Now, I think both of those are also solid ETF options, but clearly, neither of these can match SCHD's overall dividend profile. I mean, not only do both of these have lower starting yields and dividend growth rates compared to SCHD, but they've also delivered lower total returns over the last 5 years. Now, before we look at the 5-year period, to be fair, looking at a shorter time horizon, just here in 2024, SCHD has underperformed the other two ETFs. SCHD is up about 15.25% compared to DGRO, up 20%, and VYM about 20.5%. But then if we zoom out to the 5-year, SCHD does appear to have the advantage. It's up 75.4%, including dividends, while DGRO is not too far behind it, is 71.2%, and VYM's trailing by about 10% with 65.9% return. And then zooming out once more over an even longer time horizon over the last 10 years, to be fair, DGRO is outperforming the other two in this time period. DGRO is up 202.8%, while SCHD is trailing by about 10%. Really not too crazy. SCHD is still up 192%, but VYM is trailing by quite a bit. It's only up 158%. So overall, still very strong performance from SCHD, and even though it's not outperforming DGRO over the 10-year period, you're still getting that higher dividend yield and that higher dividend growth rate, and I do think that's worth taking into consideration. And still, the performance that we've seen from SCHD has historically been very strong, which is really no surprise when you consider the fund's main objective and its strategy, which, as we can see here, is to invest in stocks selected for fundamental strength relative to their peers, focused on the quality and sustainability of dividends. In fact, to even be eligible for the fund, each stock must have sustained at least 10 years of consecutive dividend payments. So there has to be some sort of track record of dedication toward the dividend. And at the end of the day, the only companies that can continue to grow and pay their dividend are the fundamentally strong ones. These companies have to be able to grow their sales, grow their earnings, and grow their free cash flow if they're going to be able to afford a growing dividend. And these are the only types of companies you should want to invest in anyway. And when you combine 100 plus of these companies into one ETF, you get the kind of consistent performance and dividend growth that SCHD has dutifully delivered year after year. Now, still on the topic of performance, SCHD was outperforming the S&P 500 for quite a long time, which is definitely a notable achievement for a dividend-focused ETF, or any security for that matter. And comparing the total returns between these two, SCHD and the S&P 500, here in 2024, the S&P absolutely smoked SCHD. The S&P was up about 27%. And if we zoom out over a much longer period of time, over the last 10 years, we can see that the S&P still is outperforming SCHD, but they are neck and neck, guys. There's like less than a 2% difference between these two over the last 10 years. And like I said, for a long time, SCHD was the outperformer in this situation. We can tell from this chart here, for most of this share price chart over the last 10 years, the orange is above the blue, and it looks like the convergence or the crossover was just here recently. But then if we zoom out all the way to SCHD's inception, all the way back to October 2011, here in this time period, SCHD is outperforming the S&P 500. So since its existence, SCHD has been the dominant fund. And generally speaking, it seems that the farther you zoom out, the better SCHD looks against the S&P. But still, going back to this year-to-date performance, the main reason that the S&P has overtaken SCHD in terms of total returns over these last 10 years is because the S&P has clearly seen well above average returns. And after what was, a very frothy 2024, it wouldn't surprise me to see some sort of pullback or some sort of correction here in the near future. I feel like we're getting close to being about due. And let me be clear, that's not like a prediction or anything like that, because I have no idea if or even when that would happen. But if it did, SCHD looks pretty well positioned to hold its ground better than the S&P 500. At least this is how we saw it play out during the last down year in 2022. Looking at the returns just for this year, it's pretty clear that the S&P 500 saw a much worse drawdown than SCHD in 2022. And if history is any guide, SCHD could once again outpace the S&P if we encounter another 2022-like scenario in the future. But anyway, guys, switching gears and taking a look at my SCHD position over here on Snowball Analytics, as we can see, it is my largest position overall. I dollar cost average into both SCHD and the S&P 500 through VU every single week. And I think that duo right there is fantastic. It's a very well-balanced combination for any investor. And I think you could base your entire portfolio around just investing in the S&P 500 and something like SCHD. But anyway, back to my SCHD position, we can see I have about 313 shares of the Holy Grail of Dividend ETFs at an average cost per share of $25.62. And every single year, this position is generating over $300 in dividends, which is pretty sweet. But going back to this number of shares, my goal by the end of the year, guys, was to reach over 300 shares of SCHD. And I am so proud to say, guys, that we officially crossed that mark. This was my last investing goal that I wanted to cross off by the end of the year, and we finally did it. Now, I'll be talking about this a bit more in my next video, but one of my big investing goals for 2025 is going to be to hit 450 shares of SCHD. Now, at this point, we have less than 140 shares to go. And with 60% of my Roth IRA contributions going toward SCHD every week, I should have no problem hitting that goal. I mean, just for my contributions, I should be able to reach just over 450 shares. And obviously, this doesn't account for any share price fluctuations, so that could definitely throw a wrench in things. But either way, reinvested dividends will definitely help the cause, and we'll see how things go. No matter what, though, I'm just going to continue dollar cost averaging into the Holy Grail of Dividend ETFs and continue building up the almighty dividend snowball, which is what I'm telling you about in this next video right over here. With each contribution that you make and with each dividend reinvestment back into your portfolio, your dividend snowball just keeps getting bigger and bigger and bigger to the point where the growth of your portfolio truly becomes this unstoppable force. It's a really cool thing. So click right over here to learn all about it, and I'll see you in the next one.